Hey, feeling good, like I should. When in dark, I walk around the neighborhood. Feeling blessed, never stressed.
What's going on, people? Back with a bang. This is The Money Management, back here with another video for you guys today. So I'm sure you guys have heard of the term options. I'm sure you guys have been hearing terms like call options, stock options, put options, all that kind of stuff. So in today's video, I'm going to be breaking down exactly what stock options are. I'm going to explain in terms call options, put options. We're going to look at some trades I've done in the past. We're going to look at stuff on the screen. We're going to do all of that. And then by the end of this video, hopefully you guys are going to understand exactly what stock options are, and going forward, you'll be able to make your trades confidently. Now, I do want to say before we begin that I am a beginner, but I learned stock option trades from actually putting money in. I didn't learn from anybody. I learned purely from myself. So also at the end of the video, if you guys stick around for that, and I'll briefly touch on exactly how I lost a lot of money during quarantine trading stock options, but how now I'm finally a profitable trader. So we're going to dive into all of that in just a second. But before we jump into that, please make sure you guys drop that thumbs up, especially if you're new around here. Make sure you drop that thumbs up, not least for the Santa hat. Also, make sure you guys do text Santa. It does say text Santa, so make sure you guys do send a text to Santa. Of course, if you're new around here, hit that red button below, subscribe to the channel, and please make sure to share these videos with your friends. But now let's dive straight into options. So stock options, I'm sure you guys have been hearing that term a lot. People making crazy money with stock options, all that kind of stuff. Yes, it's definitely possible. And I'm going to show you guys on screen exactly what people are talking about when they refer to stock options. All right, so to begin with, we're going to look at Apple stock, because this is probably one of the most famous ones out there. I'm sure you guys have all heard of Apple. If not, well, I'm filming this with an iPhone. I'm on an iPhone now. You can see a MacBook there. I'm sure you guys have heard of Apple, but again, if you've not heard of Apple, well, you should by now. But anyway, we're going to dive into Apple stock, take a look at it, and understand exactly how to place a call option or a put option on Apple stock. So to break it down exactly, really simply to you guys, so you guys completely understand, if I want to trade an option on Apple, I have two options. I can place a call or I can place a put. Now, I'm going to show you guys about buying calls and buying puts, but let me just show you this to begin with. If you think it's going up, like it says on screen, you will buy a call. If you think it's going down, you will buy a put. It is that simple. Now, you guys can see some different dates here. All of these dates are from different Fridays coming in the next weeks. Now, I'm going to show you exactly what I mean when I say buy a call or buy a put. So right now, as you guys can see at the bottom of the screen, the share price of Apple is $131.72. So if you think the stock is going to go up and you're optimistic about the stock, you would buy a call. So in this case, the stock price is right now at $131.72. And you're seeing all these different prices. So you're seeing $132, $133, $144, all that kind of stuff, and different prices on the right. So to begin with, to make it really simple for you guys, the $132 call means the price that you think the share price will hit. Underneath, you see the break-even price. That is the price that you need the stock to hit for you to make your money back. The 2 break-even percentage is the percentage that the stock needs to gain from where it is right now to your predicted price so that you can get your money back. And now you can see on the right hand side, the $4.80 in this case is the premium. So the premium is what you pay for the stock. Now it says $4.80, but when it comes to stock options, everything is multiplied by 100. So $4.80 is your price point per contract, but you have to pay $480 for one contract as it is multiplied by 100. So let's say I did expect it to go to $132 by 31st of December, so the last day of the year, next week Friday. I can look at the prices, the options, and as you guys can see again, if I think it's going to hit $132, it costs me $269 per contract. If I think it's going to hit, for example, $140, then I pay 60 cents per contract. So as you guys can obviously see, the price per contract gets cheaper the higher you think the stock price will reach. So if I'm expecting a $150 call, then the price per contract is only 13 cents compared to the $132 call where the price per contract was $2.69. Now let me just show you guys how you would buy a call option for this stock. So for Apple, I think it's going to go to $132 by next week Friday, the 31st of December. I can buy one contract for $269. Remember, $2.69 is the premium, but $269 would be your actual cost. And I could review it, and if I was okay with that, I could swipe up to submit. Now I'm not going to submit a call option on Apple, even though to be honest, this would be a good call option to place in my opinion, but I'm not going to do that here. But I will show you again what else you can do. So 5 would be times whatever premium you're willing to pay. So if I said I'm only willing to pay $265 and I submitted that, then once the premium reaches $265, it would execute and I'll be in at $265. Now to show you guys what I mean when I say a premium, I'm going to show you guys some of the previous calls I have bought, so within the last 6 months. So let's just check this out. So as you guys can see now, My average cost on this Tesla call was $69.60. That was my premium. So $69.60 was multiplied by 100. So in theory, it actually cost me $6,960 for one Tesla contract. Now here you see the current price of my contract was $99.75. So obviously I'd made my money back. Now there are a few more here that I'm going to show you guys just so you guys can get the feel for it. A Facebook call option I placed where I paid an $8.70 premium for the stock, and the price it got to at that point when I took the screenshot was $18.85. Again, that's for the premium at that point. So once I sold it at that point, I would have made money. Here's another one with American Airlines, another one with VSLR, purchased for $1.35. It reached $1.43 at that point. Same here with Plug, where it was $0.96 and it eventually reached $2.52. And then a few more recent ones, which I placed in the last few weeks. Lemonade, $3.70 purchased, $29.10 was the price point at that point. So as you can see, these are really crazy gains because the stock itself was moving up in percentages, which made the options move up in even more percentages. Remember, options are very volatile, so that's what happens in these cases. And now the last one, which is actually from yesterday, where my average cost was $5.90, so that was the premium I paid. Eventually, the price got up to $23.95, as you guys can see on screen. So just to reiterate, when you buy a call option on a stock, let's say the premium you pay for it is $2. As the stock itself rises in price, the $2 premium will become $2.10, $2.20, it will become $2.25, $2.27. Eventually it will rise as the stock rises. Now you're making money because the stock has gone in the direction that you expected it to and you wanted it to. Don't want to complicate things too much, but the further out you place them, the less volatile your stock option will be. The closer date you place them, the closer your expiry is, and obviously the more volatile it will be. Now, just to go back to Apple, let's say I wanted to place a put option. That means I expect it to go down. So if I buy a put in this case, I say, let's say by January 29th of next year, I buy a put for January 29th. That means by January 29th of next year, I would expect the price point to drop to whichever put option I would buy here. So let's say I expected the price of Apple shares to drop to $125 by January 29th next year. I would place a buy on this put option, which says $125 at $3.83 per contract. Now, again, everything is multiplied by 100. So the purchase of one put option, which expires January 29th, would cost me $385. You can, buy 100 of them, you can buy 500. Obviously, it depends how much you've got in your portfolio. Now, I'm not placing any options here, as I told you guys. First of all, because the market's closes past 1 a.m. Secondly, because I'm not actually trying to put any call options or put options on Apple right now. You guys have definitely seen me buy calls before. If you've seen any of my other videos, I'll link a couple in the description below. But yeah, again, options are very volatile. So the closer you put for your expiry date, the less time you have for it to hit that price point. The further way out you put it, of course, the more chance you have for it to hit that price point, which is why your options will be cheaper. Now, again, I don't want to complicate things too much, but let's say on November 27th, you bought a call option on Apple when the price was at $116.59. Let's say you placed a buy for the stock to reach $125 by this Friday, Christmas, so the 25th of December. Now, of course, as we are, the price has already hit $131.78. So you obviously would be in the money. You would have made double your money, if not triple. I don't know obviously exactly how much you would have made, but you would be a lot better off. On the other hand, if you had placed a put option, and let's say you said the stock was going to go to $95, you would have probably lost almost all your money if you didn't close out your trade. So just to simplify it, again, buying a call means you expect the price point of the stock to go up. Buying a put means you expect the price point of the stock to go down by your expiry date. So that was me clearly explaining exactly what stock options are, exactly what calls are, puts are, that kind of thing. And like I did mention at the beginning of the video, I did want to briefly touch on my experiences trading stock options during quarantine and how it led me to this point where I'm actually a profitable trader. So to begin with, I just want to say, again, options are very volatile. So if you expect a stock to reach a price point by a certain date, it has to reach that price point for you to be able to execute your trade. If it doesn't, well, you're pretty much screwed. So again, let's take Apple for example. If I said that Apple would reach $160 by this Friday, well then Apple has to reach $160 by this Friday, or at least go in that direction. And if it doesn't, you're pretty much screwed. So my experiences with options trading, I want to highlight the mistake that I made many times, which was expecting a stock would shoot up so much within such a short period of time, which was unrealistic. So I did certain things like, for example, this is far-fetched, but it's an example, saying Apple would reach $200 by this Friday. And these things would never happen. On the other hand, a different mistake I would make is to say, Apple would reach $132 by this Friday, and it would reach that point, it would go past that point, and I would get greedy with my money, seeing it soar and soar and soar. So what I'm saying here is those two mistakes, being too greedy and also being too optimistic, made me learn how to balance things out. So now I know how to place options trade, not putting in too much money. Also, give myself enough time, a month or so, for the stock price to hit whatever price point I'm looking at. And again, not being too greedy when it does go past that price point. In some of my previous videos in the last few weeks, also when I was in London mainly, I was trading certain stock options, and with these stock options, I did make some very good money. Again, I've gone through the process of losing a lot of money first before I learned how to actually gain money. So if you do want to make some money in this game, be prepared to lose some. And if not, well, then at least be prepared to learn a little bit slower than I did, for example. So hopefully you guys have enjoyed today's video. Hopefully you guys do appreciate it. Like I said, please drop that like if you did enjoy it. If you have any questions, drop it in the comment section below. Also, feel free to send me an email, send me a DM, whatever you would like, whatever's best for you guys in this case. Lastly, I do want to say there's free stocks for you guys in the link in the description below through Robinhood, through cryptocurrency, through Coinbase. Also, make sure you guys do share these videos with your friends, because I'm sure many people are trying to learn how to trade options at this point in time, this period of time. Don't be dumb with your money, don't waste your money, but do the right things and what's best for you for your financial future. Thank you guys so much for watching today's video. That's it for me today. I got money making, you got options to be learning. See you guys tomorrow for another video. Peace.